You found the perfect house, but now you're faced with an important question. What mortgage rate are you locking in? A small change could cost or save you thousands over the life of your loan. Let me tell you a story that might change the way you think about mortgage rates. As you're navigating the home buying process, understanding mortgage rates is key to making the best financial decisions. Have you ever thought about how much a small change in your mortgage rate could impact your finances? Let me know in the comments below what you think about locking in a rate now or waiting for a better one. And don't forget to subscribe and hit the notification bell so you don't miss out on any of my future videos. If you have any questions, feel free to reach out to me using the contact methods in the description below. I've worked with countless home buyers, and while every home and every buyer is different, there's one part of the process that always comes up: the dreaded mortgage rates. It's not the most exciting part of buying a home, but it's easily one of the most important. I've seen firsthand how even a small difference in rates can impact someone's long-term finances, and it's a lesson every buyer should understand before locking in their mortgage. Let me give you an example. A couple I worked with once found themselves in a situation many buyers face. They found their dream home, but they weren't sure if they should lock in their rate now or wait. They had seen rates move around a lot recently, and like many buyers, they thought maybe rates will drop if we just wait a little bit longer. The problem is no one can predict the housing market. There's really no such thing as a perfect time for mortgage rates. Sure, rates might go down, but they can just as easily go up. The couple decided to hold off, hoping for a better deal, but in the time it took to get their finances lined up and finalize their decision, rates crept up just by 0.5%. It didn't seem like much at first until they reached out to their lender to go over the numbers. The difference over a 30-year loan: almost $30,000 more in interest payments. That's an extra burden they could have avoided had they locked in their rate sooner. It's a perfect example why waiting for the perfect rate can be risky. No one has a crystal ball, and mortgage rates can change at any moment. That's where rate locks come into play. A rate lock protects you from these fluctuations by securing your interest rate for a specific period, typically 30 to 60 days. But there's something many people don't realize. Rate locks have expiration dates. If you wait too long and your lot expires, you're back at the mercy of whatever the market looks like at that moment. And as we've seen, rates can climb quickly. I've seen situations where buyers didn't act quickly enough, and when their rate lock expired, the new rate that they were offered was significantly higher. It's one of the most frustrating parts of the process because at that point, your hands are tied. You either accept the higher rate or you risk losing out on the home that you've fallen in love with. Truth is, while we can look at market trends, no one can predict exactly when mortgage rates will rise or fall. If you find a rate that fits within your budget, the smartest thing to do is lock it in. It gives you peace of mind knowing that you won't be caught off guard by a sudden spike, and allows you to focus on the more exciting parts of home buying, like decorating or planning your new space. A lot of buyers also get caught up in trying to decide between fixed rate and adjustable rate mortgages. For many, a fixed rate mortgage offers stability. You know exactly what your payments will be like each month. On the other hand, adjustable rate mortgages, or ARMs, often start with lower interest rates, which can be appealing, but they can come with uncertainty down the road as the rates adjust. The key here is to know your long-term plans. If you plan to stay in your home for a long time, a fixed rate mortgage might be the better choice. But if you think you might move in a few years, an ARM could make better sense, especially if you plan to sell before the rates adjust. In the end, the best strategy is to be informed, stay flexible, and make decisions based on what works for your financial situation, not on trying to predict what the market will do. Whether rates rise or fall, Being prepared and locking in a rate that works for you is the key to protecting your financial future. As you can see, understanding mortgage rates and when to lock them in is critical to protecting your investment. Be sure to subscribe. See, I'm going to keep saying describe. Be sure to subscribe to this channel for more tips on navigating the home buying process. And if you have any questions about your mortgage rates or your specific situation, feel free to reach out to me using the contact methods in the description below. Every week, I help people just like you make smart, informed decisions when buying a home. Let's make your next move the best one yet.